Rohr here with an early global view on Friday, January 30th, 2015. It's currently 6 a.m. U.S. Central Time, and even though this is a global view, we're going to keep it as concise as possible because so much relates to what we've had to say about the global weakness generally in the previous global updates and concise highlights. So, what does this actually mean to the markets? Well, after the market suffered with the concerns about weak end-of-month data in the wake of the Fed still accommodative discussion and even the higher opening temporarily off of the Apple earnings, rescuing it from the weak durables and weak Procter & Gamble and Caterpillar earnings, the S&P 500, and we're of course starting typically with our hourly chart on the left, 30-minute on the right, failed on bounces back from the terrible Tuesday opening back up into the 20, 36 to 40 range. Now, along the way, again, especially after the Fed on Wednesday, the market took some real pressure, got below the Tuesday test of the 2013 area that was kind of a key, and yet held back down into 1985 to 78, which we have been so heavily highlighting since the Fed meeting in mid-December, and yesterday morning when it couldn't get below it, started attracting buying. Gave the preliminary aggressive downward channel up break down at about 1998. That's going to be a key lower support now. Much below that, it doesn't have any up breaks. And of course, if it were to get that weak, the hourly MACD would certainly be below the lower band again. And in fact, it's trading off $13 so far this morning, already down in the 2005 area. And of course, what that means is the late up break back above 2013 to 16 at the 2014 level has already been given up again. And so if it tries to rally after GDP today, the first resistance is the reinstated resistance up at 2013 to 16 range. And the key support, if it's weakening afterward, is just below 2,000. This is kind of convenient. It gives a little bit of a tolerance, specific technical tolerance below the psychological support at the 2,000 level. And if it should crack 1985 to 78, whether that's the end of this week or into early next week, while there are some lower supports at 1950 and again down around 1928 to 25, the bigger picture would look like it's headed toward 1900 to upper 1800s to test the more major lower support. And that's pretty much it for the short-term view of the S&P 500.